Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Excuse me. I have a last print of 1181 on this Wednesday, the 7th day of April. And definitely a bearish situation we have today emerging. We're going to look at our intraday dynamics. These are proprietary indicators that tell us essentially where the market is likely to go. We're actually retesting the early session lows of the prior day, which was Tuesday yesterday. Had a nice trending day on Tuesday. Had a pretty nice trending day on Monday. Didn't have so much on Friday, but nevertheless, you see these tremendous bullish indications right here. Bullish, huge bullish, huge bullish. So we weren't able to hold on to that, but nevertheless, it was a little bit foretelling, and we did see some higher price movement and actually a break to new intermediate, and one could argue long-term highs in the market as we retested or tested around 1190 in the S&P 500 futures contract. We're coming back off that a little bit today. As you can see, it's full bearish. We are below the trend. We gapped to the downside, came back to retest the underside of the trend. Two beautiful double tops right there. We'll actually zoom in a little bit. Two beautiful double tops right there in formation, right down to break the early session lows, and now we're retesting the early session lows from the underside. So the bears do remain in control, as you can see right here. Full bearishness, full bearishness, full bearishness, below the trend, and price technical bearishness as well. So that's overwhelming bearishness on the market as we look here at around 11:11 a.m. Eastern daylight savings time. So there's a look at the market real quick, or rather quickly, I should say. But nevertheless, looking back over a few days, you see we're just retesting this former high, this swing high from last Friday. So it's kind of interesting. Nevertheless, would be selling the market around 1183.50. It's now 1181. That'll be today's trade, actually. Sell short the market anywhere from 1181 to 1183.50. Go ahead and stop that out right around here. 1186 and a quarter, we'll call it. Go ahead and target, move to 1176.25 on that. We'll see how that trade works out. Nice 5 to 7 point return. And if you want to hold, depending on how the market unfolds late in the day, you can certainly hold for the next target of around 1172 to 1171. So that'll be your free trade setup today. Sell short of the ES around 1181. This is purely for entertainment and informational purposes only, of course. But 1181 up to 1183 and 1184 is a good short opportunity. Target 76 to 72 for scaling out of your positions. But definitely the bears are in control of the market. We're going to go ahead and switch over and look at the daily market, chart of the daily market. This is the S&P 500 cash market. And as you can see, our free video analysis over the last 16 months has returned over 600 points from our official market timing basis. In fact, officially, our market timing is bullish at 1121. We have held that, although we did mention you definitely wanted to scale out of some long side profits last week. We actually have that indicated right here. Take the long profits. Did see a jump back. This is a bit rare. Did see a jump back. The market just continues to chug on along to the upside, which is pretty much good for everyone. So there you have it. Bullish at 1121. We're now at 1185 on the market. So a nice 65 point gain or so, we'll call it, over the last 3 weeks. So a nice 65 point move. And it's about $3,500, $3,250 trading just one contract of the ES. And if you took our free market timing that we send out every week, you would have made over $30,000 trading just one contract. So I hope you guys are trading off our official market timing biases. But right now, we do remain fully bullish on the market. As you can see, we've broken out to a new high, just simply retesting the former highs. In fact, not only was that Friday's high, but we actually had this high on March 25th in the cash of 1180. So just the market loves 1140s and 1180s. The S&P does, and even the futures as well. So coming up to 1200, that should be some psychological resistance on the market. From a sentiment perspective, we actually got stopped out of our free trade last week, which was this short opportunity. Market just keeps, like I said, chugging along, and as you can see, complacency is rampant. In terms of the sentiment indicators, the VIX equity call ratio definitely at lower ends, below 40, is definitely bearish on the market. We're at 48.02 right now. We've seen no spikes, but certainly this can be an early indication. Price being the final arbiter, we're definitely looking for a close below the low high day, and so far we've not gotten that. So far today, the high so far has been yesterday in the cash market, 1178.25. So we're in 11.882 right now. So if we get a close below the high of below that, yesterday's high, then certainly we'll be looking for some bearish exposure there on the market. But we do have a lot to cover, so we're going to go ahead and switch over to look at the intraday analysis, the daily analysis on the market, and we're going to go ahead and switch over now and look at some of our new portfolios. The new DDT TFO continues. We actually highlighted that last week, one of our new portfolios, and it's been ongoing for about a month. We started live tracking it about 7 days ago, actually, and we promoted it last week with a 4-day return of 35% in just 4 days. 35 is mouth-watering, essentially. Certainly save risk. Mouth-watering from an annualized perspective, but 35% in 4 days, and now here it was at it again. Yesterday took the day off, I believe. Monday didn't trade. And here another banner day, $1,250 for the DDT TFO yesterday, trading TFG and GTFO systems, and up $3,000 on a $5,000 account. So per $5,000, you've made $3,000, over 60% for the DDT TFO. Gains another 25% Tuesday, eye-popping 780 return of 60%, not in a year, over 60%, not in a year, but just in 7 days. For this portfolio. So really a banner portfolio, and actually all of our portfolios, if you look right there, these are all the new portfolios. ESG's lagging a bit. Coming in number 2 is a GTFO at $3,900 or 39% on a $10,000 account. GSP's coming in 26% return, $4,000 on a $15,000 account, and TDT at almost 20% over the last week. $1,800 on a $10,000 account, a bit more conservative portfolio, the TTT ESG. We're actually going to look at those. Here's how our primary futures portfolios have done over the last couple of days. Black was up 6,000 yesterday and 5,000 on Monday. Some nice gains on Monday. It was a pretty good day. A little bit choppy yesterday if you're more diversified. A lot of our newer models are in the matte black, so that's why it was helped out with a 6% gain yesterday. And we're going to go ahead and switch over. That's a 7-day, and we just talked about that. So if you go to the website, you look under the G portfolios, and you'll find these portfolios. These are a lot of our newer models. This is the latest quarter through April. And you can see the Elite 50 is a $20,000, Elite 50, sorry, is a $20,000 portfolio. 1,900%. This includes $26 for every round turn deducted for slippage and commission. 1,900%, 92% max drawdown. Of course, this is risk capital you're only trading, which you can afford to lose in search of extraordinary gains of 1,900% over the last 42 months. 46% return for Elite 50. Again, incorporating a lot of our systems, and this certainly doesn't even incorporate the last 7 days. As you can see, another 60% return, at least for the GT, probably 20% return on average. There's the ESG, 11% return a month. 48% is the max drawdown, 500% return. Bit more conservative portfolio for the $5,000 account. And there's the GSP, up 28% a month on average, 1,200% versus a drawdown of 72% on a $15,000 account. You can actually see all these portfolios. There's the GTFO. MAPDT version 4.0 is a $50,000 account, 59% max drawdown, 4.0 HR, 2,400% return, 118% maximum drawdown. That's been the maximum. Average is only 23% for the there's the 5.0 HR. 1,800% return, 40% a month after slippage and commissions, 90% return, again, risk capital for these portfolios. DTS version 4.0, you can actually see these portfolios on the website. They're in the process of being posted to the portfolio returns for the most recent quarter, right on the website. And the newer portfolios, you can actually see, there's the new if you go to, we'll refresh this, and go to the G portfolios right there, and you can see most of those portfolios. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com if you have any questions, and if you're interested in subscribing to any of these portfolios and getting started. And hope you enjoyed it. We'll see you next time.